Welcome back. Now our eye is on commodities. Manisha joins in as always at 10 o'clock to tell us what's happening here. Manisha.
Thank you so much for that. When I'm looking at energy as a sector, if you look at the overall crude oil prices, we are trading at multi-month highs onto this one. So Brent, for example, is trading at a 6-month highs. We're looking at nearly a percentage point of gain coming in for this one. And the WTI crude oil prices are trading at a 7-month highs as well. It's not just that. It's about the energy products, distillates. All of that also is trading at a multi-week and a multi-month highs. Heating oil, for example, is trading at a 13-week highs. The prices have gained up nearly 4% in matter of last 1 month itself. The investors across are monitoring right now the round of talks between US and Iran that is anticipated to take place on Thursday, which is 26th of Feb. But ahead of that, it is both the countries which are stuck on one point or the other, whether it's about nuclear or uranium enrichment. Trump, in the meanwhile, has warned of very bad day for Iran if the nuclear deal fails to materialize. Also, there are fears of potential military conflict in the Middle East and could lead to supply disruption. That is keeping some geopolitical premium in case of prices. A lot of experts do tell us that it is nearly $8 to $10 of a premium that the crude oil prices are carrying right now. And then it also is about reports of Ukrainian drones hitting Russian pump station serving Dizba oil pipeline. Well, this pipeline actually supplies crude to Eastern Europe, so some disruption there is also working its way in case of prices. Interestingly, a report from FGE says that the oil price spike to $90 to $100 a barrel is within reach if something goes wrong, pardon me, in the Middle East there. And then take a look at the supertanker market. That, in sense, also has been buzzing, trading at the highest level since 2019. The daily rate for hiring a supertanker is highest since 2020. From Middle East to China, those prices have surged nearly 3 times in the matter of last 1 month to $150,000 at this point in time. If you also look at the Baltic Dry Index, well, that is trading at a 3-week highs as well. So overall, the tanker demand and the tanker prices has been on the higher side. The bigger tankers actually, which carry iron ore, coal and grain shipments, have been actually surging more than what the small tankers have been doing. The U.S. crude oil production is near peak is another thing that has been supporting the markets. We have seen constant decline in U.S. crude inventories. That has been supportive. And then it is harsh weather in U.S., which also means more demand for energy. It also has to do with the U.S. implementing 15% global surcharge under Section 122. And the street is watching out on the statements that we are hearing on Section 232 as well. So everything, it's a perfect recipe really for the crude oil prices to trade where they are, where markets anticipating it's not a sell short at all as a trade. It is a buy calls coming across energy.
Thank you very much for that. We will